Okay, good afternoon, everyone. We're at our last session of the conference before we go to the takeaways, and the name of this workshop, as you see in your in the agenda, the role of CDFIs. What are CDFIs? They're community development financial institutions, commonly called CDFIs, and we will talk about the minority depository institutions and how they are addressing economic disparities. I have with me today Martina Edwards. She's Access to Capital for Entrepreneurs based in Atlanta, Georgia. And I have Mr. Lloyd Dolman. He's the Executive Director of Carver Community Development Corporation located in New York. Miss Alicia Mendez had planned to join us, but due to a family emergency, she will not be able to join us today. But we're going to cover her subject well for you. And so we get started. We're going to start first with Martina. She's going to talk to you about the program that she's the chief of in Atlanta, Georgia. Um, Martina, will you come up, please?
Yes, hello. Good afternoon, everyone, depending on where you are. I'm so excited to be here. My name is Martina Edwards. I serve as Chief of Strategic Partnerships for Access to Capital for Entrepreneurs. And like Mr. Daniel said, we are a community development finance institution serving the state of Georgia. We are the largest small business focused only CDFI in the state, covering 68 counties. We have a focus on women, people of color, low to moderate income individuals, and neighborhoods. And we can provide capital to anyone, but that's our focus area. We provide lending capital anywhere from $15,000 up to $1 million. We've been around for 21 years, and I'm just excited that in this last couple of 2 years in particular with the pandemic that we've been able to do really rewarding work and stand in the gaps with small businesses that were really on the brink. We've done about 40% of the 120 million in lending capital that our organization has put out over the years in just the past 24 months. We've seen extreme demand and need, and we focus on any small business that's interested in getting capital for working capital, business expansion, inventory, or if you want to buy assets, if you're in a building and you want to buy it. So we know that by doing the work that we do, we are giving folks a chance when others can't or won't, particularly those have been overlooked by traditional banking institutions. And there's been no time that's been greater than what we've been in the last 2 years, really, for our work. And with that, I'll pause and turn it back over to Mr. Daniels.
Lord, we would like to hear from you and the work that you're doing in New York City.
And thank you to the Society for Financial Education and Professional Development. I'm very excited to be here. Good afternoon, everyone. As Mr. Daniel said, my name is Lloyd Doman, and I am the Executive Director of Carver's Community Development Corporation, a subsidiary of Carver Federal Savings Bank located in New York. I have over 20 years of experience working in finance, with half of that time working as a Wall Street portfolio manager and trader, and the other half working at community development financial institutions. And prior to joining Carver, I worked at PNC and their community development banking as a relationship manager. And before that, I managed a $3 million microloan fund at the Harlem Commonwealth Council, providing access to capital and technical assistance to minority and women-owned businesses in Upper Manhattan. Carver Federal Savings Bank has been serving the community for 73 years, with 7 full-service branches located in Harlem, Brooklyn, and Queens. We also provide online banking across 9 states, from Massachusetts to Virginia, through carverbank.com. With over 700 million in assets, we are one of the largest African American and Caribbean American managed banks in the United States. And similar to Martina, we are a certified CDFI and also a certified minority depository institution. One of the things I want to highlight is that during the pandemic, we actually were able to help many of the small businesses in our community that typically would go to the larger banking institutions, but unfortunately, maybe weren't able to receive some of the services and support that they needed. And during that time, we were able to provide over $50 million in PPP loans to those small businesses, which helped preserve over 5,000 jobs. And another program I want to highlight is that through public and private partnerships, we've also been able to work with one of the largest agencies in New York City, the MTA, and we've provided over $23 million in access to capital for that group. With that, I will stop there and turn it back over to you, Mr. Daniels.
Okay, that's good. Well, thank you very much, Lord. And I have a series of questions that I would like to ask you, and because I know the audience has questions too. Um, but one question I have, Martina, um, just what is your typical entrepreneur that comes through the door seeking assistance from your CDI there in Atlanta?
That's a really great question. And we have a really diverse portfolio. So
Hmm.
it's hard to say that we have a typical client or small business type client. But what I can do is maybe put them in certain verticals.
That's great.
And so for us, we have the smaller client that is your solo entrepreneur. If anyone knows anything about stats, really the stats around the U.S., but particularly in the city of Atlanta, 96% of Black entrepreneurs tend to be solo entrepreneurs, where they don't have more than it's just them, right? It's not they don't have employees, or they just contract out.
Hmm.
But there is that other 4% that we also work with that are on the other side that have businesses that are poised to scale. And they've been doing really great work. So we work with a combination of both. And we have businesses that sit right in the middle. They've been around for a while, they're established, they're just steady state in where they are in terms of their growth. So again, you got those early stage, that middle stage, and those that are really getting ready to maybe rocket off if they can get some diversity supplier contracts and things of that nature. And
Hmm.
since we're talking about the types of businesses that we work with, how we work with them and what makes us really uniquely different than a traditional banking institution is that we're able to provide the capital coaching and connections, those wraparound services that I call,
Oh, I
that
see.
really help to ensure the resiliency of those businesses.
Hmm.
We're like their partner along the way. So you don't just get a loan from us and then the next month you get the statement for payment in the mail. We are there to help you with pivoting strategies. And again, as I mentioned earlier, that was so very important as folks were dealing with closures and mandates, and just even now with the variant and the the variants for COVID-19 with this pandemic, of how do you navigate some of those road bumps and challenges along the way. So we actually have a business advisory services team that's made up of financial advisors, and their job is really to spend time one-to-one or work with you on a peer-to-peer, like peer group basis.
Hmm.
And for that portfolio on the upper side, the larger businesses that we see, we actually partner with, as Lloyd mentioned, that they do some partnerships. We partner with the ecosystem. So ACE is really focused on the financial operations. We want you to be a better financial operator, understand your books, your statements. But we know that other things that are outside of our core competency, we will refer you on to a community stakeholder within our ecosystem. So we partner with Morehouse Innovation for Entrepreneurship Center, as an example, on two cohort models that are positioned for those companies that are a bit larger, that are looking for diversity supplier contracts, and that can get connected in those ways. So I wanted to just highlight that in terms of, we just look at it as a portfolio, and we are pretty much sector agnostic. We have about 20 different sectors in our portfolio, between education,
Okay.
healthcare, those businesses that are very hospitality rich because of the Atlanta market here, and the different firms that we have.
Hmm. Oh, that is great. I like that, being 22 different areas. That's really good, covering a lot of territory. Now, Lloyd, when we talk about community development financial institutions,
Hmm.
um, where does the money come from to establish a CDFI? Is this private money? The federal
Hmm.
government supports it to kick it off to get it started?
Hmm.
Um, and then you start issuing the loans. Just explain that more to us, please.
Yes, that's a great question. So you have the CDFI fund. So in any CDFI, they have been certified by the U.S. Treasury,
Hmm.
and you have the CDFI fund, which provides grant support. As well as financial facilities to those institutions so that they can actually provide access to capital and also the technical assistance that goes along with it to help small businesses, to help nonprofits, to help consumers. And so Carver Federal Savings Bank, we are also a publicly traded company as well. So in addition to the grant funds that we've been able to receive through the federal government, and we just recently received the rapid response funding through the federal government. There's also state funding. So in New York State, you have the Empire State Development Corporation. They also provide grants and facilities to CDFIs as well. And we've participated in those programs. And for us being a publicly traded company, we were able to attract private dollars from corporations as well through preferred stock as well as sub debt.
Oh.
And so we could actually use that capital so that we can continue to invest in the community and support our programs and our operations. And one of the things that really impressed me about Carver is that 80 cents of every dollar in deposits is reinvested back into the communities we serve. And it's extraordinary because those funds are used to help grow businesses in the community, help with job creation, as well as economic empowerment. The capital that we receive goes straight into the community and also supports our programs. And similar to ACE, as Martina described, in addition to the capital, we understand how important the support is, the ecosystem, the resources are to the small business community, and for us consumers as well. So we work with consumers, we also work with small businesses, and we can't do it on our own. So we have some strategic partnerships, both corporate and nonprofit. And through those partnerships, we're able to provide these resources, whether it's one-on-one coaching and support for small businesses with financial management, or financial literacy and education training for young adults, students, and the like. So these resources are really critical for CDFIs to grow and operate, and we can tap various sources to support the operations.
Hmm. Well, that leads me to my next question. As we try to, uh, as the country tries to take some steps to deal with economic disparities that exist, uh, what do you need to sustain your growth and to meet the demands that probably will come about, from the communities that you serve?
Yeah. Do you want me to kick that one off, or
Yeah,
Yes.
yeah.
because my answer will probably add to what Lloyd was talking about for the last question is, when we go out and we get this capital, we are not a publicly traded institution. We are a nonprofit. So
Hmm.
we can't tap the capital markets, but what we are able to do is work with traditional banks who have CRA, Community Reinvestment Act. They have certain mandates around that
Oh,
says
okay.
you need to make sure that you are doing a good job and being a good steward of the community where you have your business. And so those banks, oftentimes CDFI, the way that we are able to provide affordable capital to small businesses, some CDFIs focus on housing, others focus on community facilities. Wherever your market is, we're able to do that because of the fact that we're able to offer low interest, what we call patient capital. And that's the type of capital that we get from our different investments and investors and funders. So sometimes it's banks, sometimes it is national foundations. We obviously were able to get money from Treasury as well. The rapid response, we were able to procure dollars from that, and those dollars we're able to take the combination of the capital that we borrow, the lending capital, and then I go out and I got to get a lot of grant dollars as well. So we were able to take that kind of blended capital to ensure that we have low cost and affordable loans for our borrowers, but also that supports all of that business education. What Lloyd referred to as technical assistance can be a term that throws people off. I call it business advisory, but it's basically the same thing. We're not helping you with your IT. We call it technical assistance. We are actually helping you with your business in terms of how you can streamline things, make improvements to ensure that you can grow and be sustainable. As it relates to what's going on in the world and the economic divide, the reason why small business is so important is that it creates collective prosperity. We know that we're actually helping to bring the dream to life for that entrepreneur, that business owner. And when we're helping them to do that, it creates financial stability in their homes. It creates financial stability in the homes of the staff that they're able to hire. And then it makes the community more resilient. And where you have more financial stability in homes, you have thriving children. There is a lot of intersectionality in between what's going on in our world, between housing and affordability of it, the lack of money that you have in the healthcare system. So you had this pandemic that exacerbated existing racial issues and systemic issues, and then it just kind of brought it all to bear with the pandemic. So what we do, the CDFI industry, just to give some insight and background, really started out in the 60s in the Johnson administration. It was a way to combat racial discrimination and redlining that was happening. And redlining is a term that basically means banks back in the day were actually drawing these lines around certain zones and areas, neighborhoods, and saying, you cannot invest in a certain person of a certain background or a certain neighborhood in a certain zip code. So that lack of investment, that disinvestment in not only people and places is what really led to these decades of inequity that we are trying to combat now. So the reason why we are so important, our industry is so important, is because we're trying to level the playing field from an equity perspective. For ACE, I know for us, our mission is around growing sustainable businesses, but our vision is really trying to help close racial and opportunity as well as get wealth gaps. And so we have a strong focus on Black and Latinx communities and women with the work that we do.
That's great. Yes. Now, Lord, when we talk about the pandemic, how did you manage the influx of need there in New York when small businessmen came knocking on the door? How did you go about dealing with that?
Yeah, that's a great question. It took the entire organization to roll up their sleeves, to work long hours, even on the weekends. Everyone was involved with this effort, and during that time, it was almost like the plane was being built while you were flying it. I mean, you know, regulations and different policies and terms were changing by the minute. And so everyone just had to be as flexible as possible and just understand that we were ultimately trying to, save jobs. And we were ultimately just trying to make sure that it wasn't worse than what it was at that time. And so even our CEO was, on phone calls late at night, speaking with small businesses, helping them to submit their applications, and that's one of the reasons why many of the small businesses came to Carver, the larger banking institutions, where there may be a branch on every corner. They just weren't able to provide the hand holding necessary for many of those businesses to get across the finish line and get their application submitted in enough time. And so that's something that Carver was able to do. We considered ourselves a financial first responder. You just needed someone to step in and hold that person's hand, and somebody that they could trust to know that they could call them at any time and get this done. And that's what CDFIs across the country had to do during this pandemic. It wasn't just Carver, it was ACE, it was all the 1,200 CDFIs throughout the country. Everyone pitched in to help, because that's what we do. And so through that, we were able to save over 5,000 jobs, and we were able to not only provide just over $50 million in PPP loans, but we were also able to partner with a minority fintech provider to provide 16,000 loans throughout the country through a liquidity facility.
Oh.
So not only did we kind of roll up our sleeves and get to work, but we were also able to help other institutions do the very important work in the community as well during that time. And out of the pandemic, we found that many of our clients still need the support, and they still need additional capital because as they come out to stabilize their business operations, now there's strong demand. The demand is coming back, and this is an opportunity for those businesses to grow. Unfortunately, what we saw was that there was a report by Statista that said that over 40% of Black and Brown businesses during the pandemic either will or have gone out of business, and that is just unfortunate. And so we're doing everything that we can to get these resources out to the small businesses so that they can continue to do the great work that they're doing in the community.
That's good. Now, Martina, do you have similar? You had similar experience?
Yes, I was doing a lot of head nodding as Lloyd was talking because, although we're in a different market, I think our entire industry, I mean, it just experienced that balloon of need, and there was a great volume. And for us, like I noted, we had such substantial growth going from what was I tell people, a rock star year for us in 2019. We had done 13 million in lending for just under 100 loans, and that was a lot for our small shop. And then in 2020, we did 25 plus million in lending, and then we came back this year, and we've already done more than 26 million in lending. And so we've gone from now we have about 1,200 in these just past 2 years new or existing loan clients. We were able to stand up PPP as well for a CDFI like ACE that's not publicly traded. Liquidity is certainly a concern. It's probably still a concern even for Lloyd's team, but it was a concern for us for sure because we had to make sure that we had to be able. We ended up it's getting it a little bit technical to tap into the Fed window, and we had to work with a larger institution to be able to do that, so that we would have capital available to continue to fund the need that was out there. But I also thought it was interesting too. There was in times of crisis, there's opportunities. You can be very opportunistic. So all of a sudden there was these opportunities to partner with municipalities within Georgia that were saying, hey, the Fulton County and DeKalb County areas that were saying, hey, we're having a challenge just with the small businesses in our county. How can you help us to help those, small businesses? So we were able to find unique partnerships that we hadn't tapped into previously that really extended our reach and created more visibility for us. So I will certainly talk about that. And then one of the partnerships that we are a part of now is called SOAR, Southern Opportunity and Resiliency Fund. And that's a big fund because the South probably has the least amount of CDFIs. And it was a way to kind of shore up the CDFI market and create this common marketplace where folks could go onto their website and then almost like a matching program get matched up with the CDFI that could help them. So it was another way to help small businesses tap into our respective networks. But from a volume perspective, we've also done this year 21,000 hours of business advisory services. And that's through our WBC, which is a Women's Business Center. I got to be careful about these acronyms out here. We have a Women's Business Center that sits in Gwinnett County, and we had a second one that we were awarded. I say awarded because we partnered with the SBA on that initiative for Savannah, Georgia. So that's more in the southern region. And that has allowed us to really work with loan clients and small businesses when they come to us and they are not, maybe sometimes they're not loan ready. And we're agnostic. If you're male or female, or you can come to us and if you have an idea, as long as you have that idea, we can help you through your business plan. We have something on our website that folks can check out. So aceloans.org, and you go to the WBC section and you can click on this thing called Dream Builder. and it is a 12-course module for free that you're able to tap into. It will walk you through pricing, inventory,
Oh,
how to pull together financial statements, marketing, all the things that you need to think about as kind of all the spokes for from a business perspective. But yes, we saw a lot of great volume, and I'm really happy to say that from a default perspective, we have a lower default rate in the past 2 years than we actually had prior to. And that is because we were able to stand up a lot of business preservation strategies. And I'll tell you, I didn't go into my background. Lloyd and I know each other from interning back in the day, so a long time ago, years ago. But I've been in the CDFI space for about 3 years, but I did spend about 10 years in the for-profit space, started my career on the Florida New York Stock Exchange before coming to do this type of work. And the businesses that we have seen have really just they're doing amazing work in terms of turning around. But I remember folks saying in the beginning, we've got to bump up our loan loss reserves. And if any financial institution, you have to do that. You have to account for the risk that may occur. And folks were saying at the top of 2020 that the CDFI space could have 25 to 30% losses. And that's why I say to you, we have a default rate under 2% today. And that's because when I heard that, I thought, well, if you have to wait till you use those loan loss reserves, at that point, the business is bankrupt.
Right.
And so we don't want that. So how
Yeah.
can we go in? So to undergird those businesses during this time, that's where the grant dollars come in. We were able to get really innovative with our partners and tell them, listen, we're on the ground, we're proximate, this is what we're seeing, this is what we're hearing. We created programs where we actually supported business with 3 to 6 months of debt payment relief, depending on the size of their loan, if it was micro or larger commercial. And we were able to give them what I called was just a break, some runway to find a path forward as they were opening their doors back up. And now it feels like maybe we're removed from that, but there was a period when 6 months went by and they were trying to open their doors and figure out how to keep folks safe. They were buying PPE themselves. They were putting up plexiglass. All of that was taking dollars from away from the business that they normally would not have to dedicate to something like that. So we said, let's give them 3 months where we're just paying their loans for them through grant dollars. We're doing interest rate buy down, so credit enhancements. Right now, we're trying to provide concessionary rates. And what that means for folks listening is if your rate traditionally was going to be at one level, we were able to knock it down 2% or 3% because of these grant dollars again. And so we're subsidizing that rate. And the purpose of doing that and extending the term is to ensure that the debt payment is affordable for those individuals as they continue to find that path forward. So there's a lot of different levers and tools in the toolbox that we're able to use. And the pandemic has really forced us to think creatively about how we can do that and work with our partners to ensure that we can continue to meet businesses where they are.
Yeah, that's exciting to hear about the tools that you have and how you're using them. It's really exciting. My ears, of course, my ears popped up when you said the Cap County. I grew up in the Cap County.
All right.
Yes. Now, and you approached the one question I had coming up, and you addressed it, and I was wanted to know just what level the your default rate was, and you mentioned 2%. So that's really good. And what do you have a similar experience there, Lord, in New York in terms of?
Yeah, and I'm glad that Martina brought that up because I think it's important for the audience to understand that the work that CDFIs do in the community is hard work. Many of the borrowers have a different risk profile. Some of them may not have good credit. Some of them may not have a lot of assets as collateral. But it's important to note that through the programs that we've created, those default rates are much lower than traditional banking default rates. And I've had experience with other CDFIs, and it was the same thing. It would be, less than 2%. And I think that's extraordinary, especially as you think about, everything that happened during the pandemic, that, those rates have remained at that level, given everything that took place. And, it forced us to just be a little bit more creative in terms of providing relief to the borrowers, and just making sure that we could be seen as their trusted, advisor during this time. Because now what we're seeing is, as they come out of this pandemic, they're coming back to us, and once we earn their trust, now it's a win-win situation for both sides, because we can continue to expand the programs that we currently have. But yeah, I did want to just highlight that, for us, our portfolio has been performing really well. And, just as any institution, you prepare for the worst. But as we continue to come through the pandemic, the default rates and delinquencies definitely weren't where we had projected. And so, that's actually a good sign. And it also shows us that, the additional work that we do to support these businesses, whether it's, one-on-one coaching, whether it's any, grants that we can provide, and additional assistance, that goes a long way to help them continue to grow their business. And also the financial literacy and education component. We're not just handing them a check and telling them to be successful. We're also, providing that support, and giving them access to the resources and the ecosystem. And in many respects, just during my career, I've even connected businesses with contract opportunities. I felt that I should continue to build relationships in the community, and if we have an anchor institution that's looking for women and minority-owned businesses, I can make that connection for them, and I can also provide that capital for them, that affordable capital, so that they can actually fulfill that contract. And so that's another, aspect of what we do that might not get highlighted, is that we're able to connect these businesses with opportunities through our strategic partnerships, help them with any educational gaps they may have, or any service gaps they may have with their business, and then help them even to be able to get contracts and finance those types of contracts as well. So ultimately, they can build wealth. Ultimately, they can continue to help build the community, and be resilient, and build sustainable businesses.
That's good. I really like the holistic approach that both organizations uses. And it's creating success. That's great. Now you hear a lot about microloans. Even before people start talking about CDIs, you hear about microloans. Uh, do What about microloans? What is your threshold for microloans? And those are those microloans eventually converted to more uh, permanent loans or larger loans as the company grows? Let's explain that to me. Either one of you. Yes.
Yeah, I mean, I could jump in really quickly. So I've actually had experience managing microloans in the past, and typically loans less than $50,000. Usually the terms are out to 5 years. There may be some that go beyond that, but in many cases, those businesses may have revenues less than 500,000, some around even 100,000 or less. And those they may have 20 employees or less. These are small businesses. Many of them, may be sole proprietors, and they actually need that extra working capital so they can take on an additional contract, expand into a new market, purchase equipment. those fund inventory, those types of things. And so at Carver, we're actually in the process right now of launching our microloan program, and we received $1.5 million from one of our corporate partnerships, and through that, we're going to launch our microloan program very soon. And we're going to provide loans from 5,000 up to 50,000 for a term of 5 years. And one of the things we want to do is just to make sure that the rate is affordable, 5% or less. And we want to make sure that the terms are flexible. So we're allowing the borrower not to pay interest for that first year. And we also have some wraparound services, as Martina mentioned, with ACE to help those small businesses with one-on-one coaching around marketing, as well as legal services and financial management. And so one of the things I've found too is that, the administrative component to running a microloan program can be very tedious and difficult to manage. And so we're partnering with a minority-owned fintech provider to create a portal and allow us to upload applications, documentation, and do more character-based risk assessments for these borrowers
Oh,
versus just relying on credit scores. Because coming out of the pandemic, we're anticipating that many of these small businesses, their credit may have taken a hit because a lot of Black and brown businesses will use credit cards to fund working capital, and unfortunately you have a lot of predatory lenders out there charging unbelievable amounts of interest rates, payday loans, and things like that. And so we want to just make sure that our loans are affordable and that we can help them to continue to stabilize their business operations, but also position the business so that they can grow.
mhm,
Um, so that's where we are with our microloan program.
mhm.
Yeah. And ACE has a microloan program as well. We've been a SBO microlender for several years. It counts for about 20% of our portfolio at any given time. And so the benefit of having that is SBA obviously has a lot of different the quasi government money, I always call it, so they're able to do a lot of other things for borrowers. And so anybody that was on our books that had a micro loan during the pandemic, I mean, the SBA was actually providing them with a similar using a bit similar business preservation strategy where they were layering in 3 and 6 months of payments for anyone who had gotten that type of money. So that's a good thing. We actually this year, in just 3 months, did more in micro lending that we had done in last year. And so several $1 million that we were able to kind of put out, and then we're able to draw down additional capital each year to do additional lending. So one thing that as Lloyd was talking, he mentioned credit scores and new models and ways to evaluate. I mean, this pandemic forced us to, as we were trying to think about moving capital quickly, to reevaluate our underwriting processes and try to streamline those things. When we say, and I don't want anyone to get anything misconstrued on this call, that there's a different risk profile, that is true, but it is because we know one of the things you brought up was just the systemic kind of issues and policies that have been around in America, and particularly within financial institutions that have been embedded, that have created biases related to how women and people of color are evaluated from a loan perspective. There's a higher declination rate among those groups. And so, and there's also what we call collateral shortfall. What do you need when you go out to get a loan? Folks want to make sure that they get repaid, whether it's a CDFI or a traditional bank. And collateral is a piece of making that work. It's something to say, well, if you don't repay this, this is something that we can use, against that loan. But their collateral shortfalls a lot of times in Black and brown communities. So one of the ways and the lever that we utilize is a loan guarantee. And we work with traditional foundations or other folks to say, will you be willing to help us set up a loan guarantee? And what this is a pool of capital that we can say we can apply. So instead of if I came to you and I had collateral shortfall, instead of telling me no, when you can see that my business is actually doing well, it's kicking off revenue, but I just don't have the collateral. Instead of telling me no, I give you a seat at the table and I say, you know what, you can do this because I do have this loan guarantee. And this pool of money will backstop your loan. And so that's how we are able to be really creative in our industry is I can say, 20%, if it's $100,000 loan, 20% or 30%, whatever the number is, $30,000 gets backstopped using this loan guarantee pool. So if there's a loss, there's something that's backing it up. And it doesn't have to come from the borrower. And do we graduate them? Absolutely. Our goal is to graduate our borrowers from being micro lenders to hopefully they're scaling their businesses and then they're able that they need larger loans. That has been really what has been with not SEO, ACE over time is that we have borrowers like Amia Guild, who is a woman who runs a business called It Takes a Village Capital. And it's a transportation system. And she always struggled with transportation. She had 4 kids trying to run them around Atlanta and pick them up from school. So she started her business with she wanted to start it with just one 15 passenger van. And now she has a fleet. But when she went to banks with this idea, everyone turned her down. They said no, they would not give her that first loan. Now, full circle, that happened 3 or 4 years ago. She came to ACE. We were able to give her first kind of $25,000 loan, able to purchase this 15 passenger van. Now she has a small fleet of vans.
That's great.
Over 30,000. Her and her team have done over 30,000 round trips, no accidents. And now, most recently, what I'm excited about is she's come to us to get larger loans. We were able to help her during the pandemic, but Miss Guild is gotten approval this year to be a child care ride share service in the state of Georgia. So she's now effectively able to compete with other rideshare platforms for children and college students and elderly. And that's a huge win for us, for her and for us, mostly for her. But when she came to us all through the pandemic, right, her business had come to a screeching halt, if you think about school systems.
Yeah.
For about 4 or 5 months. And she realized if I don't start to incorporate some new ideas, pivot and new technologies, then I'm not going to survive this. And so she had this idea and she worked with our Women's Business Center team. She got some additional certifications to be a diversity supplier that helped her to maintain the revenue, stay afloat, and also develop this idea. And she went through one of those cohort programs that I told you about earlier that we did in partnership with Morehouse. So we're able to really take a business and be with you from ground up. And now, it's going to be a pleasure to watch her scale her business.
That's great. Now, that leads me to another question. You have loans to purchase equipment. You make loans to purchase equipment, for operations, and just for lines of credit for cash flow. You make loans in all those 3 categories or more.
Yeah, we don't have a necessarily line of credit. We don't offer that. But we have all the other categories that you're talking about in terms of working capital, inventory, equipment, and very flexible, right? We're very flexible. Traditional bank wants like a hard asset. We are able to, use the equipment as the collateral. We just try to make it happen as much as possible, understanding that a lot of those things, are not going to carry the weight of the loan.
Yeah, so we do offer those categories, and like Martina said, we just try to be as flexible as we can. We always try to get feedback from our clients just to find out what product suits them best. A lot of times for many of the contractors that we work with, they need more flexible capital in terms of lines of credit as they actually draw down funds and submit requisitions for their contracts. So that way that kind of keeps the cost of their capital low as opposed to just taking, a term loan. And so we always want to, be as flexible as possible. Like you mentioned, inventory, equipment purchases, and now a lot of businesses are pivoting to, e-commerce and beefing up, their, some of their other offerings on the internet, and so they're leveraging technology and looking to, borrow funds for those needs. But one of the things we try to do too with our small businesses is try to understand, what's the need? Why do you need these funds? Because many of the small businesses, they may need to, get some more information about how they're managing their business from a financial standpoint. Understanding how much working capital you need if you're funding your accounts receivables. Maybe you're having challenges collecting your accounts receivables, and if you're looking to take on additional business, do you have enough capital to do that? And that's where, the financial literacy and training comes into play, and some of the consultants that our small businesses can work with, because many times they're doing everything. They're running a business, they're handling marketing, they're doing accounting, they're hiring people, and they may not have, the horsepower to focus on, why they actually need to borrow the funds and what they're going to use it for. So those are some of the things that we try to help them with, and provide as much flexibility as possible with our lending options.
I see. Now, do you ever get to the point where you're prescriptive in terms of, if we make this loan to you, you need to have an accountant, you need to have uh, two workers who have this capacity, do you, to make sure that they're successful? Do you, how do you approach that? Because some people have a great idea, but they don't have an infrastructure in place to make sure that they're successful. Do you get into that at all, or that comes through your financial literacy training?
I can speak for us. I think a lot of that comes out of the business advisory services and the financial education that we're able to offer.
Okay.
The hope is that looking at the money, looking at the profitability of the organization, their ability to do what they say they're going to do with the funds, those decisions are made early on. If we feel like we are not an institution that will just make a loan to you for the sake of making a loan for you to you, because we want to make sure you're successful.
Yes.
There have been countless times where we say, well, you can, it's a fork in the road, and you got to go left to the WBC, the Women's Business Center. And oftentimes what happens is that those businesses will spend 3 to 6 months with them. They'll work with our WBC. They'll work
Okay.
with another organization called SCORE. It will
Mhm.
help them to maybe lift their credit score in some type of ways. Like, we're flexible as much as possible, but sometimes and we look at it, like you said, holistically.
Mhm.
A credit score is not just one determinant. There are several. We will look at blemishes and then say, do we see a positive trend since those blemishes have taken place? But sometimes, we're not able to fund everyone because they just may not be ready. And ready is all those things that you mentioned, Mr. Daniels, right? Like, do you have your infrastructure in place? Do you have a way that you're tracking? Do you have bookkeeping in place? And if not,
Mhm.
Lloyd would use a great word. I love the word horsepower. If they don't have those things in place, we do have consultants and folks that we work with that can help them try to stand it up. That is going to be a critical differentiator now when you think about the e-commerce and the digitization that we are in our society, for businesses to be able to flourish and continue to thrive on a long-term basis. Even if you're small, working with them and partner. We have some partners that have partnerships with GoDaddy as an example. So they can help them get their website set up, help them get their e-commerce platform set up. We'll send them over to them, say, get this stuff together so that you don't actually fail. We want you to be successful. And then
Mhm.
once they're able to do that, what folks have seen now, I mean, the pandemic, we were already in this e-commerce environment, between all the big packages deliverers that have boxes at your door. I won't name any of them. But between all of that, but it catapulted small businesses, and it could be a good or a bad thing, but it forced their hand to really get their e-platforms into place. And like I mentioned earlier, we have a composition and a portfolio of clients. Some of them are small, some of them are large, and the smaller ones are probably having the most challenge with getting where they need to be. But for those who are able to make that pivot and shift, they are seeing the whole new world open up to them, because it doesn't matter that you have your brick and mortar shop here. You're able to sell, some of them are able to sell more through their online platform than they ever were by foot traffic coming into their store.
Mm-hmm.
And
Mm-hmm.
so, sometimes experience is the greatest teacher, right? So then they say,
Yes,
"Oh
sir.
my goodness," or through some of these peer network sessions where we've had these virtual sessions, and they're hearing another peer in the space talk about how this platform has helped them, and then they say, "Well, I'm gonna get my stuff together and go ahead and get this stuff done." So that's the benefit of having working with a CDFI, is that we can really help you through the entire process. And if we don't have the skills to do something, if it's not a part of our core competency, then we will get you to the right person in front of the right people, to set you up for success.
That's great. Now, most of the loans that you make are made to private entities. Do you ever have an instance where you make a loan to a nonprofit organization who has a track record, but they are waiting for the grant to be dispersed, you
Mhm.
know, so they can make payroll or just get into the next grant period? Do you get involved in the nonprofits at all?
Yeah, at Carver we do, and it's a big part of what we do in terms of our lending platform, working with nonprofits, and I've worked at nonprofits, and I've seen firsthand how important it is to get access to capital to continue with some of the really important social programs that are provided in the community. Whether social services or faith-based organizations.
Hmm.
Yeah, we have done so, and I bring back the PPP process and the pandemic, and we were able to help a number of nonprofit organizations that were literally not knowing where to turn in order to make payroll for the next week. I mean, some really important nonprofit organizations in New York City that provide essential services in the community, and so we recognize that that's another very important part of our communities that we serve. We can't just help the small businesses and not be able to provide similar resources to the nonprofit organizations as well. So we've been helping nonprofits for a number of years now. We have specialized programs to help them with capital and technical assistance.
Oh, that's great. How about you, Martina?
So we have a focus, mostly on for-profit businesses, but we do
Okay.
have nonprofits in our portfolio. So
Okay.
faith-based ones as well that come to us, and we'll do what we can on a one-off basis, usually to help those folks as well
Right.
continue to move through. Even we've got a lot of daycares and things like
Hmm.
that, and a
Hmm.
handful of those are nonprofits that are doing really well. We've been able to help them, in fact, to acquire, now I think, their second building, for their daycare center.
Hmm. Oh, that's good. Now, there are a lot of CDIs around the country. Do you ever get together um, uh, to network or have conferences to share best practices, experiences? And how often do you do that?
Oh yeah. I mean, now everybody has, I'm sure, Zoom fatigue or whatever platform we're using. I do like this platform that we're on today. But there are so many different conferences, and the virtual world has really decreased those barriers, right? To
Hmm.
before, you thought you might need to see Lloyd in New York, you think you got to have a New York meeting, or you got to, get on a flight, but you don't have to do that anymore. Zoom has really created an opportunity for us to chat in a different way. There's Opportunity Finance Network, that is the kind of member organization for our sector. And
Hmm.
they just actually finished hosting their Finance Justice conference a couple weeks ago. So that's a really big one. And then they do these forums throughout the year, just like a small business forum. There's so many different panels and conferences. I think this makes my third one for this week, and I have
Okay.
another one next week. So there's no shortage of that. We definitely try to get together, share our different thoughts and experiences, and spitball around what are the challenges that we're seeing, right? How
Hmm.
do we? I was on one last night from 4 to 5:30 for with the Deputy Secretary of Treasury, actually. And so it was about how do we sustain the growth
Hmm.
and how and the different programs they have coming out and wanting to get our feedback on the ground. There was people on from California, all across the country, talking about what they're seeing because no CDFI is the same. We're not cookie cutter.
Right.
Based on what region we're in, we see different challenges around that as well. So yes, in short and long, that's the answer.
Oh, that's good. That's
Yeah,
really good. Because
yeah,
you
Mr.
go ahead.
Oh no, go ahead, Mr. Daniels.
Yeah, you see a lot of entities, particularly in minority communities. Sometimes they even with the churches, you know, they just parochial. There's right
Hmm.
in the one ditch, one line. They don't
Mhm.
really try to come together to look at best practices to make them all better. You know.
We're so collaborative.
Yeah.
Particularly, I mean, I know in the Georgia market, our ecosystem is so strong, and it's not just CDFIs, right? It's Atlanta Wealth Building Initiative. It's the Russell Center for Innovation and Entrepreneurship,
Uh
right?
huh.
That's Herman Russell's legacy over there, and we have an office. We're one of their anchor tenants. Like I said, it's Morehouse. There are so many Village Micro Capital is another one on the ground doing great work. At Atlanta Village Market, everybody's doing stuff and it's saying, hey, this is where I fit in the space. This is where they fit in the space. And then we come together to make sure that we can just move the needle.
Hmm.
So it's really an exciting industry and an exciting time because there's so much visibility
Yeah.
that has been kind of spotlighted for our industry. You got big institutions like PayPal and Google that have thrown money behind CDFIs in ways they
Hmm.
have not done prior to this pandemic. It
Hmm.
is creating, as we're seeing more volume, it's certainly good to have that additional funding and interest in our space. I'm sitting
Hmm.
here today listening to Lloyd. I wrote it down twice, and he said, we're working with a minority-based fintech organization on a platform. Well, right now we're looking at we're bursting at the seams, right? We're
Hmm.
experiencing pain points of businesses and our capacity is a concern. Our
Right.
infrastructure is a concern. The technology and the human capital. We went from a staff of 19 to 34 in the
Hmm.
past 2 years. And
Hmm.
the full 15 we hired happened in 2021 because 2020 was so crazy. We just did all that hard work with the same team. So to ensure that we didn't have burnout, now we have actually grown our staff. But we,
Hmm.
again, that question of, not necessarily what keeps me up at night, but certainly something that we ask ourselves over and over again is how do we sustain this growth? And it's
Yes.
Hmm.
great to have new entrants and new interest in our space that's willing, that has shared value around what we're trying to achieve from a
Yeah.
mission perspective.
That's good. That's what I like to see, sustained growth. We just keep
Mhm.
moving.
Right.
Yeah, let the pandemic and other issues be a stepping stone. You
Hmm.
know,
Hmm.
to just
Hmm.
expand and grow. Yes.
Yeah.
But
Yeah.
I think some of the economic disparities can be eradicated. Through programs like yours. I don't think we have to depend on systemic discrimination going away, which is probably never will. But if we come together and support each other in their businesses, I think we can deal with those disparities and we get rid of some of them. Yes.
Hmm.
Hmm.
Yeah. Yeah,
Yeah.
I was going to add, Mr. Daniels, in addition to what Martina mentioned, in addition to OFN, even in the New York area, we have the New York State CDFI Coalition, which has been around for over 10 years. And they actually have a meeting once a year. And it's just great to get together with your colleagues to share best practices, to learn a lot more about what other CDFIs are doing in the area, and to continue to network and work together on with some of the same issues that we all face in the communities that we serve, whether it's small businesses, whether it's nonprofits. And in addition to, I mean, I actually have been in the community development space for about 9 years now, and I can tell you that my time spent at the Opportunity Finance Network conference, and typically they'll have it in different cities, has been so rewarding. Just hearing about the work that's being done all over the country, meeting various colleagues and just sharing information, sharing resources, just trying to build the capacity of our CDFIs, because as Martina mentioned, we have a capacity issue. We're competing against the same talent that Fortune 500 corporations are trying to compete with, and so we need to make sure that we're retaining talent, that we're able to attract talent to this industry, and we're also able to leverage technology so that we can do more. Because one of the things I'll tell you is that there's
Yeah.
more demand for our services than ever before.
Mhm.
Even before the pandemic, the demand was great, and now it's just on another level. And as
Mhm.
Martina mentioned, it's great to see additional capital and attention come into our space. But we need to continue to build our capacity, and continue to digitize our processes, and stay competitive and resilient, and keep our models sustainable.
Yeah.
Because if we're not around, then our communities are going to suffer.
Mhm.
So we need to make sure that we're continuing to bridge the wealth gap and do the work that we're doing across the country.
Mhm. That's great. Yeah. Oh, yes. That's absolutely. Well, we only have about 15 more minutes to go. I want to see if our audience has any questions. If you have any questions, please put them in the chat box. And we got some great experts here, and I know they'll be able to answer your questions. I hope we didn't give you too much information. You have all your answers now.
I count that as a job well done.
Yeah.
If we can be so
Absolutely.
thorough. But no, definitely happy to answer any questions if there are any, as we prepare to close this conversation out.
Yeah. Okay. Well, that's good. Okay, but it's been a learning experience, I know, for me and others, and this was really great. It's a good way to close it out, and I just want to thank you, each of you. And stay in contact with us. We're all about the same thing. Trying to enhance the financial and economic well-being of individuals and households. So we would like to just continue the conversation and share. Going forward. Yes. And give my regards to Alicia. I hope
Yes.
her mother is okay,
Yes, we'll
and
do.
we will talk soon. And thanks very much for taking the time out. And I know this is a stretch for you, Martina, since this is your third one this week.
Hey,
Yeah, I know the feeling. Sometimes we back to back too,
no,
because we deal with a lot of we deal with the HBCUs around the country, provide financial literacy training to the HBCU students.
oh
And we were
really?
just at Morehouse on the 1st of November. So
Oh
we
my goodness! I wish
Clark land in
I known you
October.
were here. I'm an HBCU alum myself. I graduated from Tuskegee
Oh
University.
yeah,
Yeah, I'm
we
originally from Alabama, so
we've had Tuskegee last month in October. We've been out 3 times this year already at Tuskegee.
next time you're gonna have to hit me up.
That's right. Yeah. And our managing director of SFPD, she's from Alabama too. She lives out in Montgomery.
Okay,
Yes.
yep,
Nice.
Hmm.
yep.
Nice.
Grew
That's
up,
good.
grew
Yep.
up from age 9 up in Alabama, and Montgomery in particular. So
Uh-huh.
yeah, good
Yeah,
deal.
I used to travel that state a lot. I used to be the regional financial management specialist for HUD. And I covered all 8 states, so Alabama was one of them. So people used to ask about those towns in Mississippi and
Hmm.
Alabama and Arkansas. How do you know about that? I said, well, so I know all the areas there. Yes, right. Okay. Well, you again, thanks very much, for joining us today.
Thank you. Thank
And
you, Mr. Daniels.
we will any follow-up questions that we get. Oh, here we go. Bob has one. Will the increase of inflation affect lending? One just popped up there.
Hmm.
Will the increase of inflation affect lending?
Yeah, I mean, I think you can actually tie that into inflation. That's something that we're seeing, and we know that the trade winds of inflation are going to continue for the foreseeable future. As a banking institution, and we have deposits. Through our deposits, we're able to lend into the community. It will impact lending. I'm not sure how and what the rate of that impact will be, but we do know we're entering into a rising rate environment, and so that will put pressure on demand. It'll put pressure on the cost of borrowing, the cost of capital.
Hmm.
It definitely will, cause the economy to start to slow to some extent. Um, it's going to impact housing. So it's going to cut across all industries. And I mean, one of the things that we are focused on is making sure that the lending that we do, the rates that we charge, are affordable. And so we want to make sure that our businesses have enough of the capital that they need at an affordable rate so that they can continue to grow their businesses. So there will be an impact. I don't see anything in the foreseeable future, like if you had to say over the next 6 months to 12 months, but I'm sure over the next few years, we're going to start to see rates rise, and that inflation will start to trickle down through the banking system, and cause the cost of capital to rise. But we keep a close eye on the Fed and where rates are, as a banking institution, and what that means for our borrowers.
Yeah, and I think to add to that a little bit more color is that that's the cost of capital side of the house, and obviously when your cost of capital goes up, then it kind of can lead to more cost of capital for the businesses that we serve. I think how inflation is really right now showing up is in the cost of goods and
Hmm.
inventory, and
Yeah.
we're seeing those
Yep.
shortages play out across the marketplace. And
Hmm.
so a lot of our small businesses where some of them have gotten on track. I was just reading an article. I'm in Smyrna, Georgia, and I was just reading an article about what was happening here in a small business that typically has a big kind of boost and uptick during the holiday season, has been
Mhm.
ordering things since June and July. Some came in October's, and others are still outstanding. She has not received those things. And so that is where we're going to have to keep a watchful eye from a
Hmm.
small business perspective on our clients who are in those types of spaces, because or those who are just experiencing, they're doing construction work and they can't get the wood because of the labor shortages or the wood shortages. And a lot of this obviously has been brought on by the pandemic, because you've got a great resignation that's been happening, but also we have to really realize that we had a lot of hundreds of thousands of people who passed away, and
Yeah.
those folks have not been replaced within the workforce. So
Mhm.
all of that will come into play, but certainly inflation is really in the cost of goods and services that our small business clients are experiencing. And I'm just hoping they don't get derailed, because many of them have really put the measures in place, accounted for some downfalls, some short, some like your waterfall of, I'm not going to get as much in revenue. I may
Hmm.
lose 20%, and to have this derail them because either they can't afford the goods, or the cost of the goods have gone up, or it's just sitting in a shipping container. Anyway,
Yeah, supply
I
Right.
can
chain
go on
issue.
all day about it, but yes, that's a very great question. Thank you, Rob,
Yeah.
for that, and Sandra, thank you so much for your positive message about the work that we do.
Yes.
Yes.
Thank you.
Yeah, it's good. Yeah, thank you very much, Ms. Webb. And did you see the comment too,
Hmm.
Lord? Okay,
Yes. Yep.
good.
I
Yeah,
saw that.
yeah,
Yeah. Thank
yeah,
you.
yeah, it's
Hmm.
good.
Yeah.
Okay, well, you all have a great evening. And here again, thanks very much. I really appreciate
Absolutely.
Thank
It's been a
you.
pleasure.
it.
Thank you
Yes.
so much, Mr.
Bye,
Daniels.
everybody.
Bye bye.
Bye bye.